What is up, everyone, and welcome back to How to Invest in Commercial Real Estate. And today is a super exciting show. We have a guest on the show. His name is Scott Krone, and he's going to tell you a little bit more about himself here in a moment. But I think just right off the bat, speaking briefly with the guest before the show, there's going to be a couple interesting topics. So self-storage is a pretty popular investment vehicle in commercial real estate that a lot of people start with or maybe start to underwrite with. I would like to think it's maybe a little bit simpler in the underwriting and the facilitation of it, but we can get into that in a second. But anyway, Scott, why don't you introduce yourself and tell us a little bit about who you are, what you do, and some of the companies and some of the cool stuff you're doing in real estate.
Well, I appreciate it. Thanks for having me. And as I said before, what a great setup you guys have there. That's absolutely fantastic. So thanks for having me on the show.
Yeah, welcome.
So my name is Scott Krone. I have 3 different companies, but I began in real estate, getting my master's degree in architecture. Nice. When I was undergraduate in history, so I made the natural transition from a history major to an architectural master's degree.
Seems natural.
Yeah, exactly. And so, but my professor, I was his TA, and he owned a real estate development, contracting, and architectural firm, and it was in multifamily. So my background was, my master's thesis was actually a 400-unit, $100 million mixed-use development. And then I worked for him while in school for 3 years, and then out of school for 3 years for him. And so my background really began in multifamily. I was running 40 units, $25 million projects, on a $17 million project with 51 units.
As a project manager or?
Project manager, okay. Overseeing it on the development side. I was interacting with our director of construction on site. So there was myself, him, and then we had a project architect. So the 3 of us were basically running these projects. Plus, we were converting apartments into condos and also doing property management. And so that was really my background. And then 1998, I started Coda Design Build, and we were a development design build firm. We began in single family, but quickly moved into multifamily as well as institutional. We've done 5 churches, and we got into some mixed use projects as well. And then the crash came. And, everyone was being forced into multifamily in terms of the rental. We looked at that. We did a little bit of that as well. And then that's when I began exploring self-storage. And in 2013, we started Coda Management Group to be an investment vehicle for developing self-storage. So in 2018, I sold off my apartments, and we began just focusing directly on self-storage. And right now we have facilities in Milwaukee, Chicago, couple facilities in Michigan, Toledo, Dayton. We're building one in Louisville, and then we're also building in Cleveland, and we also have Maine. So that is our portfolio right now, and that's all under one-stop self-storage.
Very cool.
So tell me a little bit more about the decision to exit out of the multifamily and start the self-storage. Were you seeking a different return profile or a different risk profile, or just thought, what were you thinking when you initially came up with it?
Well, great question. So there's a couple different factors. I mean, one, there's huge cap compression that was in multifamily, right? I mean, we were seeing like 3 and 4 caps and just really compression, and it was very difficult. And on the self-storage side, when I began researching it, I went back and looked at the 4 last recessions, and self-storage actually improved in recessionary markets. And so we developed this whole portfolio for this oncoming in recession. We've been predicting this. About a year ago, I spoke at it in Vegas at a conference and was predicting that we would be going into recessionary market. Of course, all the single family guys were like, we're not going into this recession. And I'm like, that's key number 1 right there. People don't believe it. So that was one factor. And then 2, when I looked at self-storage, it's a very predictable model based upon demographics. And so you can really study the market and see, because the market's 3 miles and, 3 to 5 miles or 20-minute drive if you're in a more rural or dense population. And you can see how much supply there is compared to demand. And if you're below that national average, then your product should thrive, and you can predict what the rental rates will be and what your expenses can be. So, what we like to describe it as apartments without toilets. And so it's just a much simpler model of multifamily. I view real estate as how elaborate we make a box. right? So you can have, we've worked on $14 million homes, and it's very elaborate. And we've worked on $100,000 townhomes, and now we've worked on, self-storage units that go for about $10,000 to build. So it's a lot more flexible model than multifamily.
So coming from your development background, I'm assuming you guys are going in and developing these, or are you guys acquiring them existing as is?
Predominantly developing. We are developers at first and foremost. So we've been buying underperforming commercial buildings and converting them into storage. And so we buy them for well below replacement cost. We like the one in Dayton we bought for $1 million. It was 90,000 square feet. And then we spent a couple $1 million converting it. And then we're below market rate in the competition in terms of cost. But the ones in Michigan, we bought an existing facility there, and we were just managing it. We did very little capital improvements. The second location in Michigan, we're buying an existing facility. We're expanding that. Plus we're building new on a vacant property. So it's a little bit of both.
Wow.
So what kind of cap rates would people find on a self-storage today?
Well, I think it depends on the asset. So when we look at cap rates within self-storage, A, B, and C classes in multifamily means really good neighborhood, okay neighborhood, and, all right neighborhood, depending on what level C. But in self-storage, that really means like what type of self-storage it is. And so, depending on, a class C, we consider it to be like more of like a penny stock. It'd be like first generation self-storage managed by mom and pop, 100, 200, no more than 300 units. Class B would be in a more suburban setting, drive up as well, but it might be climate controlled. We see that as like a blue chip stock. And then class A is over, call it 400 units, and it's fully drive in and fully climate controlled. And so, prior to the recession, cap rates were anywhere from 3 to 7%, depending on which class. And I think right now they're typically probably about 5 to 8, depending on which class you are.
Gotcha. Okay.
And so, Scott, what kind of building were you buying that you're repurposing to self-storage? I'm curious about that.
Well, we've had some fun stories. Like the one in Chicago was the original Lincoln Log Factory. And so we converted that one. And the one up in Wisconsin and Milwaukee, it was the first fireproof building in Milwaukee. So we actually got historical tax credits for it. But typically in an urban setting, these are either warehouses or they were offices that were no longer, used. And so that's where we'll be able to convert them.
I see.
So on you said it's all rolled up into one company. Are you guys doing deal by deal syndications on these, or do you guys have an open-ended fund, or are you funding these yourselves? Or tell me a little bit about how you're funding these deals, I guess.
Our capital stack. So that's a great question. Each property is in its own LLC. So we don't have a REIT in terms of just a pool of money that we're distributing. Everyone is investing in a project by project specific location. And so we do have equity investors that participate with us. We've done that since 1998. When our first, when we bought a single family home, tore it down and built a new one and flipped it. But within the capital stack, we also have some interesting tools. We've done opportunity zones. We've done historical tax credits. We've done PACE financing. Those are all the different layers that we put into the capital stack in order to maximize the rate of return for our investors.
So what does that investment typically look like? How long are they typically signing up for, or how long is your hold period? And then what IRR discount rate are you underwriting to when you're pitching them?
So when we look at a deal, if it's development, we're looking at like 3 to 5 years, and if it's a flip, then we'll look at like 3 years. And if it's construction, ever since I was in developing multifamily, we were to always modeled at 20% plus for development. And if we look at performing asset and we're just trying to improve it, then it would probably be in the mid-teens. Those are what we try to underwrite for. But we're always looking at what's in the marketplace, in terms of a pref or, what the split is in terms of, the distributions. And so we model it based upon what we're currently seeing in the marketplace.
Yeah. Wow. Well, I have a note here that you guys have an interesting thing about an app with investing on self-storage and maybe utilizing some sort of blockchain with that. That sounds interesting. Tell us a little bit more about that.
We're actually launching it probably within the month. So for those that are not familiar with blockchain is a technology which is a contract that once all the different elements of the contract come together, then it disperses it and fulfills the contract. And then the blockchain is actually the security by which it's, dispersed across many different servers around the world for security's sake. And so the byproduct of the blockchain is a coin. And the coin that we've created is called STOR, STOR, and it will be a self-storage blockchain in crypto coin. And so the idea of it is that people can invest through the coin. So they can take a crypto and back it by a tangible hard asset, but having the security of the blockchain. And then but the byproduct of the coin is that people can either pay their rent or they can get distributions, benefits in terms of longer term leases and those sorts of things with coin. And so the idea is as the portfolio increases in value, then the value of the coin will also increase. And so we're created this investment vehicle, but also the blockchain in order to help facilitate self-storage.
So are you pushing the investors from the syndication that are funding the deals? Are you pushing the offering fundraising through the coin, or is that a different thing where more of like a consumer or maybe a renter at one of your storage facilities would buy the coin thinking that, they can take part of the upside?
It would be both. So if a tenant wanted to use the coin, they could certainly do that. So if they had like Bitcoin and they wanted to pay in store coin, they could make the conversion and then pay the rent with that, and then have a share of, an ownership within the overall portfolio of self-storage facilities. So I'm part of a mastermind of investors, of self-storage investors. So there's like 30 of us from across the country. So we all have these different facilities that, as we're developing and growing and expanding them, that's the idea, is that we would have this network of store coin operators, of which then people from across the country, if they were moving from one location to the next, they would be able to facilitate within the store coin as a consumer. On the investment side, if people wanted to be able to invest through crypto, they would be able to, but it wouldn't be limited to those investors. It would still have the traditional capital.
Right. So how are you updating the value, I guess, on the coin by the physical hard assets? How do you get that in real time? Just out of curiosity.
That's a great question. It's always hard in terms of real time with anything within real estate until you actually have a sale, right? I mean, that's right. Ultimately the true valuation of it. And so it would be based upon that in terms of how the portfolio is doing. So if people then want to reinvest that coin, then the fund would grow in it. If they want the distribution, then the valuation would be upon the sales price and seeing the differentiation.
And, is it a set number of coins that you try to sell in the beginning, or how do you establish a number of coins in the initial value?
There'll be a set initial offering in terms of filling that coin base.
Okay.
That'll be very interesting. Yeah. That'll be very interesting. I've thought about that a lot. And obviously one of the big problems with these type of investments, we face the same struggle when we're doing these deal by deal syndications, is the non-liquidity aspect. You're essentially writing a check. You don't have any rights during the process, and you don't really have any right to call it back. It's just, when we sell the asset and I decide to give it back to you, we'll give it back to you. So figuring out some sort of real-time way to buy and sell that, or create a little market there through a coin, I think is a really cool idea. I've thought of it before. It's just it's a mountain to climb, as I'm sure you're in the middle of it.
Yeah, there's certainly a lot of hurdles in terms of just getting the blockchain approved. Like, why do we need this? Why do we need this coin or this blockchain is the first one in the criteria. And so we had to really model that out to describe what the purpose of it was. And ultimately, I think all of the real estate is going to be going to the blockchain technology versus title companies. I think title companies will be utilizing it because it's in essence doing what a title company does, but on a much greater security level than just being in one location. And so I think the underlying for us was always been, this is the model for blockchain within real estate. And that's what we began really focusing on. And then the byproduct is the coin. So it wasn't necessarily the coin that we did it for, it was for the blockchain technology.
I think you're right on the money. We're in Oklahoma, so we're an abstracting state. So something like that would save us about a month, literally about a month. But anyway, I know that one of the biggest reasons we do the podcast, I mean, it's a passion project of ours. We're not monetizing this. But one of the biggest reasons we do this is to try to get as many people as possible investing into commercial real estate. I love hearing the different asset classes. We do a lot of retail. We've done a decent amount of multifamily. You did value add multifamily, and it was kind of the same way for us. We and more Joel at the time felt like we were getting pushed out of it because we couldn't underwrite aggressive enough cap rates to figure out an exit, and we pivoted into retail. It sounds like you pivoted into self-storage, even though, I mean, very similar fundamentals. But anyway, any way of investing in commercial real estate is better than most other investment alternatives. And we just try to get that impressed in people's brains, is that passive income is truly what we believe to be the key to kind of personal financial freedom and allow you to do whatever you want. I know that you have a few tips here for, maximizing your life or your definition of success or freedom. I'd love for you to dive into that a little bit more.
Well, I appreciate it. And there are a tremendous amount of similarities in terms of the commercial real estate and what we've been doing. And, I think one of the main differences is that self-storage is a retail business as well. So it combines your retail element with your multifamily, because you're dealing with daily consumers, right? So people are coming in off the street, and it's a transaction of $100 or $150. And so it's very much a retail business, and we have to have that web presence, much more present than multifamily in terms of people being able to buy online or buying the services. And so, that's one of the reasons why we started One Stop Self Storage, was because we felt we could see the inefficiencies of third-party management, and we wanted to bring that in-house in order to be more efficient at it. So to me, you were asking about what is the definition of success, and people, a lot of times will equate it to winning something or being able to say $1 million or $100 million or $1 billion. And one of the things that I read early on in my life that was very interesting is there's a difference between being rich and being wealthy. Rich is someone who makes a lot of money, but is spending a lot of money. Wealthy is someone who makes a lot of money, but then can live within their means. And so for me, my definition of success is probably different than, or should be different than all of yours, because we all have different goals, right? We all have different objectives of what we're trying to accomplish. Like in this mastermind, one guy said, I want to build my portfolio to $1 billion. Well, okay, then you're sacrificing a lot of different things. And people say, well, what about your family? He's like, I don't care about a family. I just want to have a portfolio of $1 billion. Well, okay, that's his definition of success. That's not my definition of success. My definition of success is, am I investing in people along the way? And am I improving the quality of life of people along the way? Not only our investors, but also our employees and the people that come and work with us, but also our clients. So what we see for self-storage is we're helping people out during transition, during pain. And if we can make that process smoother, easier, and make it, turn a pain point into an okay point, to me, that's the definition of success. Because a lot of times people are dealing with death or divorce or, being displaced. These are all challenges that they're trying to overcome in their life. And if we can be a form of stability within that and offering them a good service, then that's how we approach our business.
Very interesting.
Yeah,
I really
fantastic.
like to hear your perspective. And you're right, we all have a different definition of success. I don't know, maybe I'll ask you guys. Mine was always time freedom. When I thought about real estate and making more money, it was only to get more time to quit the day job. And so at some point, I have enough money and I just want more time. What about you, Brian? Anything come to mind?
Yeah, very similar. And a lot of the same things that Scott said, as far as, taking care of your family. And I feel like you can do a better job of that by having more time that you can spend with them. So very similar.
Braden, what's definition of success for you?
I just don't have to worry about money.
Yeah.
I don't mind working.
Day-to-day.
I don't mind doing what needs to be done. It's just,
Just the
generally
worry.
speaking, to not have to question on whether or not I should eat at Red Robin or some steakhouse or some Chinese place. I just don't want to factor price into anything. And like I said, I don't mind working in exchange for that. But that was the whole goal, is just to not have money in the equation.
Eliminate that stress from your life.
Yeah,
Yeah.
good.
Well, Scott, really appreciate you coming on. Obviously, congrats on some of your success. I learned a lot today, but it also got my mind thinking more about self-storage, and hopefully we can come up with some questions and ask you, and who knows, maybe we can find property to partner with you on a self-storage development deal or something.
Yeah, that would be awesome.
That'd be great. And what I'd like to offer your listening audience is two things. If they email us and reference the show, we'll send them a feasibility study which explains why we picked the location that we did. And it talks about self-storage as an overall market, but what was good about that 3-mile radius. And then also a self-storage deal analyzer. So you can, if you have your multifamily analyzer, then you can put your self-storage one and you can see how the two compare.
Do you want to give us an email address for them to send that to?
Sure. That'd be info@CODA, CODA, MG as in management group.com. That's info@CODAMG.com.
Yeah, I think
Excellent.
I need to get my hands on that too. I would definitely be
for
interested.
sure.
We're going to email you.
Yeah, we'll email you for our copy.
I'll email you back first, so you
right.
guys will have it right away.
Well, anyway, I really appreciate you hopping on today. Like Joel said, we learned a ton about self-storage. I've always been interested in it. I've just never known somebody that did it. And I would say that should be the motivating point that we end on today, right? I knew nothing about self-storage. I knew it was in commercial real estate. I knew it was probably similar to what I did, but the fact that it's so easy for Scott and I to network. Scott's in Chicago. We're in Jinx, right? We're having this amazing Zoom discussing the possibilities of investing in commercial real estate through self-storage. If you are interested in something, right? Like that's why people are watching our podcast. That's why people are talking to Scott, is because they have knowledge and they're interested in sharing it. There's knowledge and there's people out there that have that knowledge that are more than interested in sharing it with you, most of the time for free. Just go out there and ask somebody, hey, you know anybody who's interested in self-storage, or do you know anybody who does self-storage? You're going to come up with an answer, and then you just ask them a few questions, and then boom, you're armed and dangerous, man. Anyway, thanks, Scott, and everyone else. We will see you next week on How to Invest in Commercial Real Estate.
Yeah.
Thanks, guys.